Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting however with this volume profile of this range over here in 2022, where you can see that the value area high has been very nicely respected as resistance for then a move towards the downside, where now the point of control at 38.9k is important support, not only because it is the point of control of that particular range, but also because at 38.7k we have the point of control of 2021, the big weekly range of that year. If we then go to the first scenario, which is the bullish scenario, we are here looking for a flat structure, after which we then expect continuation to the upside for higher prices to come. In this scenario, we have a wave A, three-wave structure, looking for a wave B and potentially then a double zigzag here, and then we're looking for a wave C to the downside. And what this creates is a fake high. So we're actually going to take the highs over here, then get an impulse to the downside, where possibly some people may count this as a wave 5, but instead it's then a wave B, impulse to the downside, usually quite quick and fast in a wave C, and then we expect a bounce again to the upside. Now also, this wave C area over here is of course the point of control, 2 point of controls, with the general area here 39k to 38.6k. Now more locally, we are then looking here for price to fill this wick that we made, right? We filled it, we moved to the 886 Fibonacci taken from the low to the high over here, which I'll show in a second. Increasing probabilities, price will eventually take the low over here. More locally, we could have here a 3-3-5 wave structure ABC, 1, 2, 3, 4, 5 to the downside, where the target area for your wave C and therefore possibly the low of your X is in confluence with this target box here between 40.9k and 41.3k, after which we're going to be looking for price to move to the upside. Generally over here, price action looks corrective. If price moves to the upside a little bit further and starts to overlap with this low over here, then we have to either think about a diagonal 1, 2, 3, 4 and then eventually a wave 5, or we can already be looking for higher prices where we do have some resistance above where price is now, which is first of all this blue box 42.8k to 43.1k and the one above 43.5k to 44k. If we go to the bearish but eventually bullish scenario, we're looking for price to move towards the downside. So here in this particular scenario, we're looking for a wave 1 or a wave A, 2 or B, and eventually a wave C or a wave 3 to the downside. Now in this scenario, currently I put 2 or B on top of these pivots over here. However, when we look at this price action to the downside, you definitely don't really want to see overlap over here with a potential low of wave 1. And also, if we are looking for a wave 3 towards the downside, we really want to see acceleration, right? Wave 3 is usually the strongest, most impulsive wave in an impulse where volume is increasing, price action is moving more parabolic to the downside in this case. But at the moment, we have quite like these long ranges while price is falling to the downside, which doesn't look very, very bearish. Now, a wave C can have these ranges, drop range, drop range, drop range. We have seen that before, but of course, that increases probabilities for then a wave C, after which we still then expect continuation to the upside and higher prices to come. Now, if we pull a trend-based fib extension from the high to the low of A to the current high over here, of then a 2 or a wave B, then the most common target area for C, between the 1 and the 1.236, is in confluence with the yellow target box here with the point of controls, and the low, the 1.236, in confluence with this small little support box over here around 37.7k. A wave C has to be an impulse, however, the moment price starts to look very much corrective instead of impulsive to the downside, it already starts to look a little bit like this, but if it continues ranging over here, this scenario becomes invalidated and we're going to be looking for other scenarios locally. Now in the most bearish scenario, we are then looking, right, for a wave 3 to the downside. Now, if this over here, currently this is your highest high, right, this is a lower high. However, the lower high of then this potential wave 2 here hit the 886, meaning any move coming down from this high to the downside has a higher probability of being a wave C or a wave Y, which increases probabilities that price is going to take the double top here eventually, which also then has an effect on the scenario I have just shown, which is the bear bullish scenario, where potentially your B or 2 is going to extend to the right side. You make a new high here, and then you're going to move impulsively to the downside. But that still means that locally, we're first then looking for this double top here to be taken. If we look at this most bearish scenario, we're looking for a 1, 2, and then another 1, 2 continuation to the downside. Here, inside a higher degree wave 3, the blue count, we're looking for white, 1, 2, 3, 4, 5. But besides wave 2 hitting the 886, which is a rare target for 2 and a common target for a wave B or a wave X, your second wave 1 here is also a lot longer in both time and price compared to your first wave 1 here, which really lowers the probabilities for a double 1, 2. As preferably for a double 1, 2, we like to see a little bit of a diagonal structure with then a wave 1, 2, 1, 2, and then a big move down where your second wave 1, first of all, takes the low of the first wave 1, but also the second wave 1 is shorter, preferably in time and price, compared to the first wave 1, which is not the case over here, as you can clearly see, lowering the probabilities of this particular scenario. And also for this wave 2 here, we then have to look for like a flat structure or a WXY, but it would be a WXY and then a flat X and then a Y being a zigzag here. This move down did retrace to the 886 or 0.9 Fibonacci, taken from this low to the high. So possibly one can get a flat in here and then a 3, 3, 5 wave structure. Then over here, you want to see a 3 wave on the low time frame as well, right? And then a W, X, and then a Y being a zigzag. So there is an argument for a potential 3 wave, but it is a very deep move to the downside as well. Did close the candles on the 1.618, which is a target for an X or B, but in generally, you get the point, right? This scenario at the moment does not have the highest probabilities. Invalidation would be for price to take the high at 43.4K. If we look at the CVD divergences, we do have some bullish CVD divergences going on. Now, the bearish ones that we had here played out very nicely. CVD, it's absolutely amazing. We had bullish CVDs over here already, also played out, showing absorption of market longs or market shorts with limit longs or limit shorts. Very nice indeed. Now, we do have some bullish CVDs over here locally. The thing is, however, that price did retrace to the 886 as well, taken from the low to the high over here. And again, after the 886 is hit, probabilities are higher for any move to the upside to be a wave C or a wave Y, increasing probabilities. Price is going to come back down later, filling this wick, taking the low as well, lowering the probabilities as well of this bullish CVD divergence here. Besides, a bullish CVD divergence with a big wick is something I never really prefer, so that is something to keep in mind as well. What is nice, however, is something that we see oh so often, and which I sometimes mentioned as a little golden nugget in live streams and stuff as well, is when the 886 is hit, price loves to retrace to the golden pocket, which it has done twice, once over here and then twice. But of course, after a first touch, the 886 price loves to move to the golden pocket, which happened once again. Also, the fact that price has hit the 886 twice increases probabilities for price to move to the downside still more locally. So that is something we keep in mind. But more locally, if price does move to the downside, it also creates bullish CVD divergences here at the moment. Higher low in price, lower low on the CVD. Let me show you this on the CVD chart here. Go to the 50-minute AGGR template and everything is in Discord, where here we have a higher low in price. Let's with the wick first. Higher low in price here. You can clearly see yellow as well as blue moving to the downside, but hey, it is a big wick. While if I zoom out, you can also see here higher lows on price, but on yellow, lower lows on the CVD, and also on blue here, actually lower low on the CVD. So we do have some bullish CVD divergences, increasing probabilities that we still have higher prices to come. Because if we look for a very bearish scenario, and we are really looking for much lower prices to come, right? A big impulse to the downside. What I like to see is big bearish CVD divergences over here, preferably with the high, or if price moves down further, come back bearish CVD divergences here, because that is something that we always tend to see at big pivot points, and that is something that we have seen over here as well when price was bouncing at around 24 to 30k. We didn't have bullish CVDs between these higher lows, but then we had another bounce to the upside, right, on the 12-hour chart at the moment, retracement, bullish CVDs here, price moving towards the upside. And also at 15k here, we had the same thing, price moving down impulsively, but we got a high time frame move to the upside, retracement down, bullish CVD divergences. And then once again here, more bullish CVD, and as price was moving to the upside here, I remember very well, as I've traded it myself, bullish CVD, bullish CVD, bullish CVD. It just kept going, and that is something that you like to see. But then of course the other way around, if we're looking for very bearish price action. Now we are contained in this range at the moment. Point of control remains interesting support if price comes down there. Now if we look at the probabilities of the different scenarios here, then on the medium time frame, it remains unchanged. We're still looking for higher prices till the moment that we really get clear signs that price wants to move towards the downside. Now on the low time frame, which is like the 1 hour time frame, right, the local range, price action is looking corrective here since the local low that was made, and then we're talking about this low over here. So since this low has been made, we got a 3-wave move to the upside, and also over here price action looks very corrective, which I wrote after. And also since the high was made, these highs here, just below the blue box, which is the resistance here, right, at around the green golden pocket, which is this scenario here, right, this also looks corrective. Besides, by the way, this again an 886 retracement. So probabilities therefore on the low time frame also higher for price to still move to the upside of the range. But on the micro, if we go to the 15-minute and have a look over here, right, we did hit the 886, even though we have some bullish CVD, we hit the 886, retraced to the golden pocket, probabilities higher to move to the downside and fill this wick, which is something that I would like to see as well. So on the micro, probabilities at the moment from an Elliott Wave point of view, as well as the Fibonacci here, of course, higher to move to the downside eventually to fill this wick. We have some support. Observe the reaction here. We want to see proof of support. You want to have your entry requirements ready, whatever that is for you. RSI divergences, CVD, stochastic patterns, whatever it is to give you confidence. If we lose this box, we're going to be looking for the yellow box down here. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use, in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.